Hi traders, Lenny here from ACY Securities. I'm the Global Desk Team Leader and Senior Trader. And today I'm going to be taking you through a quick tutorial on how to use the breakout alert, also known as the Keltner channel. Now, why would you use an indicator in the shape of a breakout alert? Well, quite simply, trading profits come from market volatility. Without volatility, there is no room for profit. You can use this indicator to visualize the volatility of the instrument you're wanting to trade. And by seeing the price break through beyond the normal volatility of the product to identify whether the market trend has changed. Now, how could you use this indicator to potentially assist you with your trading? Well, it can help you identify when volatility is low and keep you from forcing yourself into a trade. It can help you interpret the current market's long and short direction. And also when a volatility breakthrough occurs, traders can then choose if they would like to seize that opportunity. When a signal occurs, the alarm will immediately pop up so traders can immediately take action as they see fit. Now, this indicator is available to all the assets in which ACY Security provides as part of their platform. How to use it is quite simple. Once it has been installed, look for the ACY breakout alert, the Keltner in your navigator under indicators. From there, all you'll simply have to do is pull the indicator over to your chart and you'll receive a pop-up from there. Click OK and the indicator will display on your chart. So what I'm going to do now is I'm just going to jump into a chart and give a demonstration of firstly how to apply it and the different uses for this indicator when trying to interpret price action and potential trade setups. So simply what we can do is view navigator and then breakout alert, Keltner, click, drag, drop. Okay. And there we have it. The indicator is there set up on our chart. Now, in respects to the Keltner channel, right, it is more or less volatility-based bands that are placed on either side of the asset, which can aid in determining the direction of a trend, right? It uses a series of exponential moving averages, typically 20 periods, although these can be adjusted. And the upper and lower bands are typically set to two times the average true range, or ATR, above and below the EMA. And it has its similar functionalities in terms of a Bollinger Band if you have come across a Bollinger Band indicator in the past. So quite simply, what we're looking at here on the chart is we're looking for alerts where we're going to have candles closing below the band, which could then determine a longer term trend. So here on the euro dollar, we have a candle here, a bearish candle closing below the band, and we would at the time get an alert. From there, we can see the euro dollar continues to trade lower and does so and remains in this bearish trend for quite some time. This is on a daily chart, by the way, so this may be more suited towards somebody who's looking to take a longer term trading approach or a swing trader. Now, more or less, you can see here when the market is trading inside the band and we don't have any alerts, well, we're pretty much moving sideways and we may be in a consolidation phase. So according to this indicator, it's telling us that there is no confluence in regards to taking a position in either or direction. Right? And we can see here we have this little wick that breaks above the band, but as we did not get a bullish close above the band, that is why we did not get a Keltner alert to then potentially take a trade long. And then from there, as you can see, the market continues to trend lower. We have a period of time where we were stuck within the band, and then we get multiple alerts within the band to then potentially trade lower. And again, we get this alert here at 116.90. From there, bearish close, and then the market continues to trade lower from there. Also, in respects to this, as mentioned, having its similarities to a Bollinger Band, which a Bollinger Band uses standard deviation instead of the ATR to calculate the upper and lower bands, it can still be used where if you are looking to counter trend trade, if the market does come into the band on the lower side and starts to find support, you can then take a trade in the opposing direction. Now, if you did want to break it down to lower time frame charts, you can see here on the 4 hourly, you get these alerts appearing a lot more often than you would on a daily, right? And then if we do break it down to an hourly, again, you're going to have plenty of opportunities where these alerts are going to be popping up on much more of a regular basis, right? So let's have a look to see if we can identify a setup. So just here in this area, we get a bullish close above the band. We get a pullback, and then from there, the market continues to grind higher. So potentially for somebody who may be day trading or scalping, looking for these short-term setups, when you get these alerts, could potentially be beneficial, or one of the confluences in which you use to take a position. Now, if you're looking for any further assistance in respects to the Keltner or the breakout alert indicator, then please feel free to get in contact with your account manager, as they'd be more than happy to assist you in regards to the setup and give you a breakdown overall on this indicator and how it's used. That's all from me today. Look forward to speaking to you all again in the near future. Bye for now.